Hey guys, welcome back to Valareso Capital. On today's episode, we're gonna go through the weekly watch list and we are also gonna go through the weekly market update. In this video, we're gonna go through the indexes and we're also gonna cover some very important information about the VIX and also one very important chart in my opinion, which is the HYG, which are actually the chart that follow the junk bonds in the market. So we're gonna cover that chart and we're also gonna cover some of the indexes, and I'm gonna share my most high probability setups going into next week. So if you wanted to know what those setups are, make sure to stick all the way to the end of this video. If you're new to the channel, remember to like and subscribe, and also follow me on my Twitter account at Valareso Capital. So now that we know all of that information, let's jump directly into the charts. So it's very important to understand that every third Friday of the month we have options expiration week. So the past week that we had in the markets was actually options expiration week, and what tends to happen in that week is that we see a lot of range bound trading. So we see a lot of chop. One of the reasons that we see a lot of chop is that we have a lot of options expiring on that week. So we tend to see these institutions move the market in order to have those options expire worthless so that they can keep the premium. So that's something very important to understand when we are trading on an OPEX trading week. We don't tend to see a lot of follow through. So now that week is over, I'm expecting to see some follow through in the market. Now in this video, we're gonna talk about what I think is the path of least resistance of the market. So let's just start here with the VIX. And what I think is the path of least resistance in the VIX for now, it continues to be to the downside. Why? Because we continue to find resistance at this 50 daily moving average. You can see that we have found basically resistance on the entire move to the downside, and we continue to close below it on a daily basis. So I think that we can make a very easy assessment that if the VIX happens to close above this 50 daily moving average, and most important above this high from Friday, then we're probably gonna see a little bit of downside in the market. However, if we continue to fail at this 50 daily moving average and we continue to move to the downside, then perhaps we're gonna continue to see a little bit more upside in the market. Now, let me just say it as easy as I can say it. I'm actually expecting that we're gonna see a little bit of upside next week. So that's the expectation, a little bit of more upside. However, I think that we are in the last innings of this rally. Do I think this is a bear market rally? I actually don't know, right? No one knows if this is a bear market rally or the start of a new bull market. But I do think, and I do have the feeling that we are starting to get a little bit exhausted, and we're probably gonna see a little bit of a steeper correction in the market. So here are the reasons. So let's start here with the VIX. You can see that the VIX continues to trade below that 50 level in the trend oscillator, but you can see that the interaction of the VIX and the daily moving averages is starting to be a little bit different. So what do I mean by that? You can see that in the past, the 50 daily moving average and also the 21 exponential were acting as very strong levels of resistance, and you can see that the price was getting rejected pretty easily. However, right now, you can see that price is starting to move a little bit more easier above that 21 exponential. So when that is happening, we tend to see reversal patterns. Now, as long as the VIX continues to trade in this range and we don't see any move below 17, I think that we have to take into account that we're probably going to see a little bit of a pullback here, but then we're probably going to see a little bit of upside. So what are the levels that I'm going to be sharing for next week? So the level of resistance is basically above this high right here, the high of last week, so somewhere around 21. That's going to be the level of resistance that I'm going to be watching for the VIX, and the level of support is going to be this level right here, which is somewhere around 17.24. So the expectation is that if the VIX actually finds resistance here, I'm expecting for a flush all the way to retest these lows at 17.24. If we happen to retest those lows, I think that will coincide with the target in to the upside in the S&P 500, and we're going to cover the S&P 500. So that's the assessment that I'm making in the VIX. Basically, in summary, I'm looking for a little bit more downside, but I'm actually looking for these lows to hold. So that's basically what we're watching in the VIX. Now let's jump into the HYG because I think this is a very, very important chart. Now, what is the importance of the bond market, of the junk bond market in our assessment, in the analysis that we're doing with the S&P? Basically, the bond market, the junk bond market, tends to be kind of a very good indicator of when we have risk on and when we have risk off in the market. Meaning that when the HYG is rising, right, is above these rising moving averages, we tend to see also a nice rally in the indexes. However, what we are seeing right now is that junk bonds already broke to the downside, and all my indicators are suggesting more downside. You can see that the squeeze is firing to the downside. I have an active sell signal. You can see the red line that at that level, and you can see that the trend oscillator is below the middle line. So that means that we are expecting that the path of least resistance in the HYG continues to be to the downside. So of course we had a bullish outside day in the market, which is a very bullish candle pattern. However, we are below all the declining moving averages. You can see that we're below the 50, the 200, we're below the 21 exponential, the 8 exponential, and we're below the 30 daily moving average. That is actually a pretty bearish scenario for the HYG analysis. So what tends to happen is that the HYG breaks before the market. So my expectation is that we are actually going to see a little bit of a bounce in the HYG, and the level that I'm going to be watching is going to be this 21 exponential. So basically somewhere around 75.36. That's going to be the level of resistance that I'm going to be watching for the HYG. And then the expectation that I have is that we are actually going to rally there. And given the probability of my indicators and the price action, I think that we're probably going to get rejected. If we happen to get rejected, look for a retest of these lows right here, somewhere around 73. If that happens, I'm expecting for some downside after a bounce in the market, in the S&P 500. So keep that in consideration. I think this is a very, very important chart that we need to watch. So let's take a look at the S&P 500, at the S&P futures. And this is a very, very interesting chart, right? I'm actually not expecting, so here's why I'm expecting a bounce, right? First, you can see that the VIX was a resistance, and then the HYG printed a bullish outside candle. So that is suggesting that we're going to see a bounce in the HYG, and the S&P, right, these are the ES futures, which is the S&P 500 mini contracts. You can see that this actually came all the way to the 30 daily moving average, which is the pink line in the charts. You can see that we came all the way to that level, and that level tends to be a very important level of support in the S&P. So you can see that we came to that level here, then we have a very strong rally, and now we're coming back to that level after flagging at resistance. So the expectation is that this level is going to hold, and we're probably going to have a retest of these levels right here. So I'm looking for a move all the way back to 4,200 in the S&P. And it's actually a pretty easy thing to analyze. So basically, if we break below this moving average, then I think that that idea is not valid, and we're probably going to see a pullback all the way to the 200 daily. But if this level holds, then I'm looking for a retest of 4,200 in the S&P, and that's basically the bounce that I'm going to be looking for in the market. If we also take a look at the NQ, actually a pretty interesting chart as well, you can see that the NQ is actually having its first test to that 21 exponential moving average. You can see that all the indicators are actually pretty bullish, and you can see that I have an active buy signal, and this is actually after these test that we had right here, somewhere around basically in the month of January, we didn't test that 21 exponential, and this is the first test of the 21 exponential, and is also a retest of this breakout level right here. So my expectation is that we are gonna bounce here, and we're probably gonna retest these highs right here. So I'm actually not looking for new highs in the NQ. I'm not looking for new highs in the S&P based on the last rallies that we had. I'm actually just looking for a retest, and we're probably gonna see a rejection. So of course we're going to take it 1 week at the time, and the expectation for the NQ is for it to hold the 21 exponential. So that's going to be the line in the sand, and I'm looking for a retest of these highs right here. So that's basically the analysis that I'm having in the market. And now I'm going to share the weekly watch list of the names that I'm going to be watching for next week. So this is, as you know, most of my trading. So let me just get the watch list. So most of my trading is just based on the indexes and some ETFs that I watch, and then I trade the leverage ETFs for those names. So let's start first here with the RTY, which is actually a pretty good looking setup for next week. So what is the level that I'm watching as support, and what is the level that I'm watching as possible resistance and the target? So the buy area, so the area where you can actually build this position is as close to that 21 exponential moving average. So right now this candle is actually offering a really nice opportunity to start building a position for a possible move to retest these highs. So why do I like this setup? I like this setup because we had a base, we had the breakout, and you can see that we continue to hold this breakout level. So the setup is actually pretty easy. Is to get a bullish position. You can get long calls in the IWM. You can look for bullish. You can look for put credit spreads, or probably you're just gonna buy the IWM, or you can execute it with the TNA. And I'm actually executing this idea with the TNA, and the TNA is the leverage 3x ETF for the IWM, so you can also execute using that idea. So the trade is actually pretty simple. Get your bullish exposure as close to that 21 exponential, looking for a target for a retest of these highs, and basically a stop below this low that we had right here. So that's actually going to be the trade, a pretty straightforward trade. That's going to be my favorite position for the upcoming week. And now the next position that I'm going to be watching is the NQ that we already mentioned. And what is the setup? The setup is actually pretty simple. You can see that the trend oscillator is coming right into support. You can see that we have a squeeze. The momentum in the TTM squeeze is also above zero, and you can see that we're coming right into that 21 exponential. So the trade is actually pretty simple. Get the bullish exposure as close to that 21 exponential moving average, and then looking for a retest of these highs. You can see that we have the 1272 extension. Measure actually from this high right here to this low, and we get that extension coming right at those levels. And you can execute this with the QQQ or the TQQQ, which is the way that I am executing. So that's going to be for the NQ. And then the next one is going to be the SMH. And you can see that most of these setups are actually pretty much the same setup. And that's the beauty about trading. You just find one setup, and then you look to execute that setup as many times as possible once you understand the probability of that setup working. So the setup in the SMH, you can see that is basically the same thing. You can see that we're testing this level of support here. You can see that we're coming right into that 21 exponential. The trend oscillator is coming right into support. We also have a squeeze, and basically the trade is the same thing, right? You're looking to get your bullish exposure as close to that 21 exponential, and then looking for a move to that 1272 extension, measure from this high right here to this low right here, and this is the move that you're looking. And this is basically your level of the stop. So you can see that is a really nice risk reward for the SMH, and you can execute with the XOXL to get that level leverage exposure in this ETF. Then I'm going to be sharing the SPY, and you can see that is the same thing, right? It's the same thing, and that's the beauty of it. You can see that we're coming right into support in the trend oscillator. You can see that we have a squeeze above the zero line, and you can see that the price came right into support as we were mentioning. So the trade is pretty easy. Get your bullish exposure as close to support, looking for a move all the way to 4,200, and then having a stop somewhere around this level right here. So that's offering a really good and a really nice risk reward, and you can execute this with the SPY for options or spreads or whatever you want to trade on. And then finally, last setup that I'm watching is going to be the XLF, and this is going to be the finance ETF of the financials, and this is basically the same setup. Trend oscillator right at support. You can see that we have the squeeze active, and you can see that the price flagged right at this high right here, while that this 30 daily moving average catch up with price. You can see right here on this pullback that the 30 daily moving average, that the price came all the way to that 30 daily moving average, and then we have a really amazing rally. And right now I'm looking for the same thing. I'm looking for this 30 daily moving average to hold, so building the bullish exposure as close to that 30 daily moving average, and then looking for upside to retest these highs and probably go a little bit further to that 37.28 level, which is a previous gap that we have open in price. And then your level of risk is going to be right below this level right here. So actually pretty straight bullish setups for next week. My expectation is to see a little bit more upside, but I want to be cautious because of the price action that we're seeing on the HYG. So that's gonna be it for the video, guys. Thank you so much guys for watching, and I'm sure that this is gonna be really helpful. Remember that on Monday we actually have presidents. I think we have, I don't know exactly what the holiday is, but the market is gonna be closed, so be aware of that. If you're trading options, you're gonna have 1 day less for that theta decay, so be aware of that. Once again, thank you so much guys for watching, and I will see you on future videos. Take care and bye bye.